A very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and today we're going to take a look at the Forex trading webinar focusing on Camarilla this time. Camarilla is a pivot point indicator, and we'll be using that tool as the main focus, but also using other things. So there will be a mix. And we're going to take a look at the euro dollar and all other currency pairs, and take a look at DAX and oil and silver perhaps as well. But before we do that, though, let's take a look at this disclaimer. It states that this webinar is intended for a global audience and may not be suitable for everyone. Therefore, please seek to... No, sorry, that's the wrong disclaimer. I wanted to say that take a look at admiralmarketsglobal.com and check out your country of residence, select your country of residence, contact an appropriate entity, and then you'll be able to find out more information about conditions and details and whether this webinar is suitable for you. Then, this is the one I was actually talking about in the previous one. For trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so once again, the webinar is hosted by Admiral Markets. And take a look at admiralmarkets.com. You will find a lot of info, amongst others, about this MetaTrader 4 Supreme Edition with about 56 additional features, all kind of things. Take a look, and you can click on Find Out More. But also a lot of analytics and education, as you probably are aware of because you're in this webinar. Alright, so the calendar. What do we have going on? Well, next week we have a big event. We got the interest rate decision, which is a biggie, of course, from that point of view. And sorry about that. I'll put the phone on mute here. All right. So it's a big one, of course. And well, if the interest rate gets a hike, then we could see finally that dollar strength. Do I expect it? Not really. So from that point of view, if it doesn't happen, then probably I would expect the dollar to go into a continue actually with this consolidation that we've seen the last few months. All right. So let's see how that happens. It's been already consolidating for quite a while, so I think that that could continue to the beginning of next year. I really don't expect the interest rate hike, but you never know. Next week we'll know for sure, in fact. Today, what do we have today? We got some USD news, some euro lighter news, in fact, nothing very major. But I do think tomorrow we have some bigger news, if I remember correctly. We should have, let me check, we should have the euro, or the New Zealand interest rate, I think, and the Euro press conference. Let me take a look at that. In the meantime, this is the market heat map. It shows the biggest movers. It shows which pairs move a lot and which pairs had a lot of volatility. Pound CAD all the way up there, a lot of volatility, a lot of movement as well. The more, the further distance from this zero line, the more movement it made, and the further from this left line, the more volatility it has had. So pound CAD, big mover. And euro odd, a lot of volatility, but didn't move up or down. All right, so maybe not the best one from that point of view. Pound CAD is nice, maybe too much volatility, but there's dollar CAD is good. You can see a lot of movement, a lot of volatility. CAD yen. Those are the ones sticking out here, especially the CAD, as we can see. Tomorrow, yeah, we have that New Zealand, our Bank of Canada interest rate decision. And Thursday, we have that Euro interest rate decision and press conference. Already. Good. So your dollar. Let's start analyzing this one. Let me put on the Camarilla levels right away. We'll just start off immediately with that. It's a bit annoying. I was trying to change that. I have to clean up my templates, I can see, because there's so many that I have to scroll to find that Camarilla template. This is the Camarilla template I'm using. You can see the Camarilla pivot point indicators here indicating the support and resistance levels. And well, H5, H4, H3 are the levels above price, typically when price starts between H3 and L3, which is most of the time the case. And L3, L4, L5, the downside support levels or breakout spots, so bounce or break spots. Depending on the situation I look at the moving averages to see what I prefer, bounce or break, in which direction as well. And then I can use these Camarilla levels to assess potential trades, or to take trades, or to look for reactions and then trade, or perhaps look for reversals even, or not trade at all if the the chart is not interesting. So the Camarilla levels are definitely something to consider, but are not the only things, in my opinion, at least, because I'm always looking for some other confirmations or confluences, and just because price is going through an L3, that itself is not the only thing I'm looking for. All right, euro dollar is now basically pushing lower and lower, and a bit of a downtrend here on a 4-hour chart too. There's still some support left, for instance, a trend line like this, and also a trend line like this. So we're at a support level. If that breaks, there could be the next fall down to the next support level. So that could be a small breakout trade right there, relatively small at least from a daily perspective. But it could be a continuation to the downside. After which I would expect a bit of a bounce again, because we're getting into a consolidation zone, in fact, right about here, with a lot of candles in that particular price area the last six months or so. So from that point of view, there's a pretty good chance that price could stay in there or just bounce or just go sideways when it gets back into this zone, especially, of course, if we get closer to next week, the interest rate decision. So from that point of view, maybe some downside left, but I wouldn't expect a fall all the way down to 108 or 105 or 100 immediately. That probably could only happen if the interest rate indeed is hiked next week. Otherwise, I would expect some movement, but relatively tighter movement, and not be very ambitious in my targets. So if this trend line breaks, you can see there is maybe some space. We have still the long-term moving averages here, and some tops in here, which really could, I mean, all of that is an extra confluence around 112.75, 112.50. That's a first bouncing spot down to 112, which would be a second bouncing spot. So there's not really a lot of space, as you can see. Let's see how that translates into the Camarilla levels. Yeah. So from that point of view, the breakout doesn't look as appealing, because if price breaks through L3, we're running right into an L4 plus that support. So no, not really that interesting. Yes, the hourly is trending to the downside, but no, it doesn't really look that great to trade. Perhaps the upside is that a bit better. Well, the trend is down on the hourly 4-hour, but price is at support. It's close to the long-term moving average, which, yes, could mean there's a bounce potential. And we know that there was pretty good momentum to the upside here. So a bit of a hook back is possible. Let me open my drawing tool 1 second. All right. So a bit of a hook back here, maybe to the 50 fib, for instance. Roughly kind of, this could happen as well, this rough idea of a head and shoulders. Euro dollar likes the 50 fib, so 114 and move up to 114, and then a weakness to get a lower high here, and then move down perhaps to these targets, that seems the most likely at the moment. So with an H5 at the 50 fib as well, is there a potential trade up to 114? All right. Maybe. Let's take a look. 4-hour candle. Let's see. 4-hour chart. Sorry. 1, 2, 3, fourth candle. /15th candle. So I would say it's too early to think about a breakout. But if it does push through, I mean, for a reversal to the upside, if it does push through H3, hits H4, makes a pullback, then I would be interested in an intraday long up to the 50 fib. I think that could be something that's still worth looking for to the upside. Preferably breaks this trend line and something like that. That could be a small trade from 113.50 to 114. Not a lot of space, 113.40 maybe to that 114. 114 could be again a resistance spot for a move down, but it could also go up to the 61.8 fib at 114.25, by the way. Very tight, not much space. Now, obviously I could be wrong, and not wrong, but there could be a bigger downside here than perhaps I'm expecting. And that's something that could always happen, and you know, we never know 100%. Obviously, we have to assess what we think is a good breakout potential, depending on how the break happens, depending on how much space there is to important support and resistance, depending on what the trend is, and maybe even wave analysis. I mean, depending on what you want to incorporate also. So from my perspective, though, 112.50, 112.75 seems to be important enough for me to say that this breakout is not that interesting. And perhaps it will become interesting, but that's something that beforehand I wouldn't consider that strong of a likelihood. Not strong enough for me to trade it. So that's my opinion, at least. Alrighty, or analysis. Next one. Let's take a look at the pound USD. We got another, let's see, 2 weeks ahead. What can the pound dollar do in those 2 weeks? Looking at the monthly chart, we're actually retracing last month's bearish candle, very strong bearish candle. Wouldn't necessarily expect this high to be broken. Actually, looks bearishly set up with these monthly candles. Is this a retracement for more downside? I was thinking at the beginning of the month, yes. The analysis is still the same, but the downside should happen quickly. Otherwise, we're running a bit out of time. We still have 2 weeks left. Let's take a look at the weekly. We got bullish candles here. So a bit of a mixed picture when looking at the candles on the monthly and the weekly. Daily chart, you can see a pretty sturdy retracement, but a retracement up to resistance. This trend line, and if you put a fib from here to here, even a break of that trend line, we run into the 78 and 88.6 fib, and another trend line. So I'm not expecting this top to break, not expecting this trend line to break. That would mean the break of last month's high. That would mean that in that case, there's a potential for a strong trend change on the higher time frames. Therefore, if price does move up into these fibs, I think it's a prime target for shorts. So that, I think, is the most interesting trade, personally. Will it get up that high? Let's take a look at 4-hour chart and 1-hour chart. And maybe yes, because price seems to be making a kind of a triangle here. after some good upside. Let me get rid of this fib. So yes, from that point of view, a breakout here seems likely. Now I forgot what the targets are. What was the? I will put a line there. 1 second. Let me put a line at the 78.6 fib and the 88.6 fib. Good. All right. So what space is there? It's about. Now it's about 44 pips, which means that if an hourly candle pushes through this trend line, there'll be probably 20 or 25 left, which is not a lot. It doesn't have to stop exactly at that 78.6 fib, nor the 88, but I think there's a pretty high chance that it will. So yeah, here too, the breakout to the upside is not interesting, but I certainly find the reversal at this level very interesting. All right, the alternative would be if price doesn't get up there, doesn't get that high, the alternative would be to put a fib on here, and I would need to see price really break below the 50 before I can bearish. Anything above the 50, in fact, could be still a bouncing spot. So the only long potential I would see is probably if price fails here, moves down to 38.2 fib, and that could be still a potential for a long area, I think. Let me take a look at how that stacks up with the Camarilla indicator. 1 second. Camarilla is pretty tight, it's pretty close. The levels are not that spread, which means that yesterday was a slow mover on the pound USD, which obviously we can see because price went sideways like that, not only yesterday, but Friday as well. And as you can see, if price gets to the L5, it will be a 38.2 fib too. So from this point of view, L5 is maybe not so much a short target, but maybe more confluence point for from a Camarilla point of view, a reversal back up as it gives confluence with the 38.2 fib as well. So that's my view. I see, if anything, a long from here or a short from higher. Or if price really starts to break below the 50, then I would be considering that a short territory already, bearish territory. Let me check one thing. You see the H5 is not even very, very small levels. If it's this small, obviously the value is less because the chances of price, let's say, breaking through these levels and going beyond them is, if they're that tight, is very high, and it becomes probably maybe less valuable, unless, of course, one uses this H3 as potential breakout to the upside. But because of the limited space, it therefore does not seem that interesting. Dollar yen is breaking to the upside. There was a bit of a mini triangle right here. Sorry about that. Right here. A mini triangle is being broken to the upside. Well, here too, sorry about that. I again see some very limitations to the upside, considering the fact that this target is close by with the long-term moving average. So no, I would not be that interested in trading the dollar yen. As I said, sorry about that, in the video yesterday, recap video that I also that I do on Mondays, which you can find on the wave analysis part of Admiral Markets website, is that I'm not that interested in dollar yen because of the bigger consolidation here, unless it really starts to show a breakout potential right here. Aussie is in the bigger triangle as well after it bounced off the -2 target, as we said, and bounced off the support level, as we said, and then kind of stayed in between those two levels, so it means it's in a triangle. And most likely this is a bullish triangle, which would indicate that this is an A, B, C. So there is a potential for point D down for point E. Most interesting point always is E, because E is probably if it is an E, it's the last turning spot before we get another trend continuation, in this case to the upside. So point E offers tight stop loss, but a massive potential. Point E's in the triangle are always very interesting. That's the best spot, I think, for the Aussie. Obviously, it doesn't have to be an A, B, C, D, E necessarily. It could also just be an A, B, C, and we get a breakout. So either E or the breakout above B are the things I'm watching. There could be a mini breakout right here. There is some trend line like that, but that's a trend line within the triangle and are typically less reliable as a breakout spot. So, it would be trading it basically the triangle halfway, which is not as reliable. Alrighty. Kiwi made a tremendous push up, really like 600 pips reversal or retracement up to 69, which is the long-term moving average on the daily chart. At 69, therefore, could be a bigger bouncing spot, in fact, for more downside. So it's kind of in a particular difficult spot. It's not in a downtrend as yet, because the uptrend obviously very visible on the hourly 4-hour, but it is at in my opinion, a major resistance spot as well. So yeah, from that point of view, I would rather, even if it does continue up, it could be a bigger retracement, who knows, maybe even up to here. But this still, no matter how I look at it, seems to be a pretty sturdy resistance spot. And a dip down, at least at a 50 fib, I think, should be expected, which is the long-term moving average on the hourly chart. So from that point of view, probably a break of this support level, a bit of a hook back, and this reversal trade right in here, hooking back to about the same bottoms here roughly, using this zone as a resistance for that downside down to the 50 fib and long-term moving average. That particular zone right there is probably the most interesting at the moment. What if it breaks to the upside? Well, it can always push a bit through the tunnel. It doesn't have to necessarily stop right at it. So there is a potential for it to poke a bit through it. In that case, we got a 70 round level, so that would be the target, I would say. It would create divergence between these stops. Would that be, and when would that be an interesting trade to the upside? This support level obviously indicating the change of gears. So if it breaks that, I would look for a hook back, but also a bounce right here. For upside, well, what would I need to see for upside? Let's see. You see the 4-hour is staying relatively bullish because it's staying in this band and is not really not putting any candles below it. It would have to be this fractal at least. Yeah, maybe this fractal, this top right in here, which seems pretty likely it will break. Then if it does break, I would like to see 4-hour or 1-hour candle close above it with close near the high, and that could be the signal for long, in fact. I think the trail management is pretty important. The trade management is important, I think, because I want to see a good follow through with candles continuing in that momentum. If that doesn't happen, and I see price moving up a bit, but then quickly reverting into some kind of consolidation like this, I think it's better to move it to break even or exit, as I think then in that case it looks more like a hook back as weakness. Does that make sense? Quick follow through, great. No follow through, some stalling, danger sign, because of the fact that price is at a pretty far distance in terms of movement, retracement, tunnel, and therefore I would expect a bit of a pullback at one point or another. It could be now or a bit higher. So from that point of view, it's not bad to look for continuation to the upside. It's just, I think, has to be treated with a bit more aggressive trade management, so that if it does turn around, I'm not looking at getting stuck in a long and seeing it actually turn against me. All right, but not jumping for joy on the majors as yet, as you can see. Perhaps only the pound I do find interesting. Well, and the Aussie too, but it will just take some time before that plays out. That's kind of the biggest drawdown on that. Dollar CAD, let's see, hit the minus 61.8 target, bounced off that. So what next? Some divergence on this weekly chart. Dollar definitely losing some ground. Hourly is a bit of a mixture here, as you can see. Let me see where the Camarilla levels are. I'm not that fond of this one. No, let me see if there's something better. Euro yen, now looking at a triangle, actually continuation of that triangle. Let me just move the trend line a bit further like this. Clear triangle. Let's see the pound yen. Nice breakout to the upside. What happened with the pound? It's moving up, and the dollar yen is moving up, so the pound yen is moving twice as fast. Well, looking like a breakout to the upside here. Breakout above this resistance actually, and breaking like a ascending wedge to the upside. Yeah, that looks like a good break. I don't see anything wrong with that. Let me see. I think looking at this 1 hour candle close and seeing how that reacts, if that has a big wick, I would be cautious with longs. It looks like a false breakout. If this has a decent close, then I don't think there's anything wrong with that particular break. And putting a fib on that hourly candle like this, I'm waiting for a hook back to the 38.2 fib, 50, stop loss below the bottom, I think makes sense. Let's see, the target 186 for the moment, which is the minus 272 target. $186 I think is a decent level, but it could exceed that because pound yen does move a lot and could easily break through and continue, especially if it's on a roll. After that, it would be 186.75 probably. Yeah. All right, so pound yen also, I would say, joining the list with pound USD and odd USD. Euro yen, not so much. I mean, this is a triangle. It could be interesting to trade the triangle, top to bottom. It had some resistance bounce here. It's now halfway, so not at the moment at least. Let's take a look at the pound odd and euro odd. All right. Let's see. Camarilla levels, pound soft H4, pound getting some strength. So we see that against the Aussie as well. There is some divergence here. It looks like a, what does it look like? It looks like a rising wedge on the hourly chart here. And we're at the long-term resistance moving average. And we're actually here at the resistance band, but also long-term tunnel. So that's a bit of a squeeze between those two levels. But this is 1 hour, 4 hours looking bearish. And even the daily could use this as a resistance. So pound odd looks better aligned for bearishness. 15-minute chart is not quite there as yet. I think that a breakout below this trend line, below this L4, could signal that breakout to the downside. From an hourly perspective, it really probably gets interesting lower, even probably below this level. So that could be a trade more later this week, because now at the moment, although it's looking like it is a rising wedge at the moment, it doesn't have to mean that the breakout is a smooth one. It could be a choppy one. Things will probably get a bit more, the sailing will be a bit more smoother. It will be a bit better and easier to trade once more support is broken. And I think that could happen below this current L5 and this bottom. But that could take some time. It could be maybe tomorrow or later this week. Your odd is bearishly set up, aligned. Needs a break below this support level and then this support level. There could be a bigger downside trade. And this kind of gap is right here. Down to the next support, which is roughly probably in here. Indeed. Because there's multiple things. There's a bottom, there's some tops here, there's a long-term moving average, and there's a fib sequence levels that I've talked about in the past as well, which is level 1, 2, 3, 4, 5, 6, 7. So I would say that is an interesting breakout trade. So here again, the Euro 2 looking bearish at the moment, at least if it breaks that support level. So Euro and Pound looking bearish, in my opinion. And seem to be interestingly set up. So I like those two. Together with the pound yen, they're a bit discrepancy here. Pound yen is breaking to the upside. Pound odd is making a rising wedge. So what's happening with the odd yen? That's the difference between the two. Let's take a look at that. This is the odd yen. And odd is indeed, well, made a strong retracement, but now, I mean, moving averages are bullishly aligned. Here it seems to be a retracement potential as we're above the band but below the tunnel. But the tunnel is far away and the band is closer. So from that point of view, the bouncing spot of the band is possible up to the tunnel as we're above it at the moment. With a green angle. So a break above these fractals could be a continuation of the uptrend on the 4-hour chart. Yeah, so Aussie, I think, is in a position to be stronger. Now, right now, it's at a bit of a resistance, but if it breaks above it, it is in a position of strength, which means that pound odd has probably more potential to fall than maybe pound yen has potential to rise eventually. Of course, here it could still make a dip that could send the pound yen more up than the pound odd down. But in the long term, it seems that pound odd could be a better swing trade, I would say, than pound yen. So pound yen may be more of an intraday trade. All right, let's take a look let's take a look at DAX. What's happening with the German index? Not much at the moment, but it is above the band, interesting enough. Same as the odd yen, isn't it? Also above the band, near the band, bullishly angled band, space up to the tunnel. Could it be a reversal trade up to the tunnel potential there after roughly a double bottom here? And I would say, yeah, that's definitely possible. We've got higher highs and higher lows at the moment on this DAX. The double bottom at the weekly tunnel for our chart is trying to cross. So that looks like a breakout potential, I would say. There's this ascending wedge formation. The ascending wedge seems familiar. I forgot which period it was, but pound odd, I think. Oh, yeah. Ascending wedge. So from that point of view, if it breaks the top, there's a chance for that breakout. I mean, the breakout could occur, of course, something like this: break, pull back, continue. Let's put a fib on this swing high, swing low to the upside. Missed the 38.2 fib by a bit, but If we consider the 38.2 fib bounce, then the target would be this minus 272 or minus 61.8. Maybe I should be using a different fib. Let's see. If I fib from target to target, it would be this fib that's valid. Then 10,500 would probably be the main target. Alrighty. Let's see. This is oil. Well, the divergence did send price up to the daily tunnel. That already has occurred, in fact. But there's weekly divergence too. Which means I would be a bit cautious with the downside at the moment. Now, of course, there are a lot of other factors than probably technical analysis, especially on oil, I would say. But still, from a technical point of view, divergence in play. I would therefore, from a technical point of view, be cautious with shorts. And wouldn't be surprised if price is able to break above this band on the weekly. But before that happens, I would say I wouldn't be much interested in both sides. All right, that's some. Oh wait, we still have silver and gold. 1 second. Take a look at that. Let's take a look at the silver. What's going on with silver? Pretty strong resistance trend line here. Now that's not the only thing to consider, but it is an interesting piece of information. From that point of view, it looks like in the strong zone of resistance. Good breakout trade, but target just missed. But well, it could still maybe go up and touch it. That could actually be a good resistance spot for perhaps downside there. I would say minus 618, a lot of trend lines there. It's probably divergence between these tops. Let me take a look. Bit of divergence between these 4-hour tops. Well, I would be certainly a bit careful with upside. As I said, there's a lot of resistance close by. If this 8 EMA maybe gets pulled out of this band, it could be different. It didn't get pulled out in all these retracements. You see, every time it pushed above the band, it was more retracement than anything. This is a weekly chart, by the way. So from that point of view, I would say that we're at resistance, or if it moves one more time up, even more so. And for downside, I would probably need a break of this particular smaller rising wedge. All right, gold is probably will be roughly the same, but there was this trendline break too. It is also getting into a resistance zone, indeed, which is basically these bottoms right in here. Also has a trend line, so probably the same story, in fact. Running into resistance sooner or later. Maybe not now, maybe it could still push up a bit higher, but either here or here, I would say, are strong resistance zones. There probably isn't divergence at the moment. Let me check. Not on the 4 hours, so from that point of view, probably there's a good chance of one more push up to get that divergence, which is not present at the moment. So there could be one more upside on the lower time frames. Here there's a kind of a channel being made right now. So break of that channel, and maybe the break of, I would say, this top as well, could indicate a bull flag breakout potential for upside to break the 4 hour top to get the divergence, and for price to get to the higher resistance for it to turn back down again, I would say. But that's just analysis. Let's see. I don't trade these. And let's take a look at the exotics. Let's see anything interesting. The Zoom Swiss C. No, not really. I'm looking something preferably a bit more for this week, not longer. Maybe pound CAD. Let's see. Daily, it's all kind of in the same situation where the daily it's back at the tunnel, 4 hours back at the tunnel. So a bit of a mixture here, actually, from a different perspective, in the sense that daily's back to a bullish bounce, 4 hours back to a bearish bounce. You can see that quite a lot across the board, in fact. One advantage, of course, using moving averages is that you can quickly make a relative comparison, because you're looking at price relationship to moving average, and you can make quick assessments. Pound odd, prices below it, below it, below it. Pound CAD is a mixture. So, for instance, it's just an example. So we can just quickly conclude, right, that the pound odd is more bearish. It's quite easy to see that. No, nothing really hits my radar screen at the moment, at least. Do you have any particular pair maybe that you found interesting that for whatever reason, I don't see it maybe? Anything, any exotic or any major cross or any major particular time frame that you found interesting? And I skipped, or I was looking at it, but just didn't see any set up. There are a lot of pairs, of course. Anything that crosses your mind? We still have some time left. I personally, once again, I like the pound dollar resistance spot very nearby now. $40 pips left. Odd USD I like for upside if it breaks or bounces again as a triangle completion. The pound yen, let's see how this hourly closes. Pound odd and euro odd downside. It might take some time. What else did I like? Those four, I think, right? Euro dollar, we'll always keep an eye on it, but it's a bit tight. The bounce from 113.50 up to 114, and then downside at 114, 150, 450.25. That's what I was thinking about. Dollar yen does not seem that interesting, but I wouldn't be surprised if there's a rejection at 120, but I'm not that interested in trading it. Kiwi, a bit of a mixed picture there, I would say. Yes, there is that potential for breakout, but have to be very, let's say, strict or tight on the trade management there, not to get stuck in that trade. I think dollar CAD seems to be a bit mixed bag. Euro pound mixed bag. I know there are a lot of the others, euro yen too, and a lot of pairs seem to be exotic, seem to be a bit of a mixture there. Let's see, maybe your New Zealand is a bit better. Here too, though, same story. At the daily tunnel, but in a 4-hour downtrend. That's kind of the message here across the board. All right. Euro New Zealand does not show divergence on the hourly. It is in a 4-hour downtrend. So similar to the euro odd, I think it does have downside potential. Yes, it is at the daily tunnel, but it could easily push through a bit before making a bit of a bigger correction. Considering the fact that there is a bit of divergence here perhaps on the 4-hour chart. There wasn't on the hourly chart, but the 4-hour does have it a bit. Hourly doesn't. I would say that this probably still is an okay breakout. I know the 4-hour has divergence, which is definitely a red warning signal, but hourly doesn't, and therefore a break of this bottom could certainly materialize. We are breaking through a triangle in a downtrend on 1-hour, 4-hour chart. So from that point of view, it could be interesting. The downside could be interesting. New Zealand strengthening here, euro relatively weakening, and maybe the best plan of action could be to let this hourly candle close, hook back to the L3. Would be a tiny risk from the L3 as a short, I think. Let me see how much risk I would be risking. Well, if I put the stop loss just above this top, it's about 60-ish pips, which is still a lot, but for the Euro New Zealand is not that much when you're looking at the hourly chart at least. So, but that's always a disadvantage with trading New Zealand's against the euro and pound. It's just the stop losses, even in the situations where it's favorable, is still going to be relatively sizable. For Euro New Zealand, 60 pips is pretty decent, and that's still after the pullback. But the potential for downside is there, and definitely would try to maybe even exit at double bottom because of the 4-hour divergence here at L5, which would end the L5, which would give about 125 as a target. If the bottom does break, then it has potential to go to the minus 272. That would be a pretty big zone. Let's see. 300 pips. 250 to 300. Certainly not. Oh, certainly a chart to keep an eye on, I think. Let's see how this hourly candle closes. One way to do that is see if this hourly candle closes, then zoom down to the 50. Once we have the close, then wait for a bit of a pullback into the L3 and trend line. Look to see if there's any bearish candle here. If it does, it could be the signal for a short or just even a pending order right there. In fact, it's possible too, I think. The exit, one of the techniques for exits is also to split the trade in two, and I could, maybe I think I'll do that. If and when I take the trade, they're pretty good two targets. So in this case, a scale out at L5, lock in some pips, and let the other half open for a larger target, perhaps at break even, or even leaving the original stop loss. Still gives a profit, but also allows for the trade to develop into a bigger win. That could be a good situation here because of the fact that they're two good targets. Euro New Zealand, of course, also is a trade that could develop easier today. The Euro too, but we'll still have some fighting to do. It will still have to move quite a decent distance, at least another 70 pips before it even challenges before it arrives at the 4-hour bottom. So this is something that will take its time. Well, I think that it probably will wrap up my opinion for the market at the moment. I mean, there are some other things maybe to discuss. Let's see, take a look at this pound Swissy. Definitely in a range on the daily chart. Look at this moving averages aligned. Not that interesting. So I think that those probably are the most important ones. But I didn't see anyone mention any other pairs, so probably nothing else going on. I don't know if you have any questions, let me know. In the meantime, I will show you our lineup of this week. As always, yesterday Ned talked about his recap, by the way. It's Monday evenings, and then tomorrow he's going to take a look at the Asian session and which pairs to trade, and some correlation between commodities and forex. I'm going to take a look at strategy tomorrow, same time, same place. Thursday, we're going to take a look at market cycles, look at repetition in price, how we can discover those relationships, make estimates about the future, and we'll dive into those market cycles on Thursday evening. You can find technical analysis as well, as I talked about already at the beginning. You got a lot of analytics, fundamental, technical, wave, and some other things like the market heat map. Got a lot of education too about risk management, webinars, of course, articles, a blog, which will start to be a bit more active very soon. By the way, Forex Ball, so Admiral Markets Club. There's a lot of info here about Supreme Edition as well. We still have some time left. I mean, we can take a look at Camarilla indicator actually. Let me grab the historical indicator, not the template. Let me make the template blank. Good. Now let me add the historical indicator. The historical actually shows where the Camarilla levels were in the past. If you don't have that indicator, I can send it to you. Can't find it at the moment. 1 second. There it is. Good, there are the levels. So if you don't have this one, I gladly send it to you. And you can ask for it by sending me an email to try to find the there we go, to my name with a underscroll between it. There we go. If you want the historical one, no problem. Or the moving average indicator that I also was showing before that, just send an email here and indicate which indicator. So the Camarilla historical level is pretty useful because you can get an idea about where the levels were in the past, so that you have more, you can build a feeling for it. You can go into the past, get a bit of paper trading with it, and get a bit of more feeling and idea for the indicator. And that helps, of course, with getting a better understanding of it and knowing how to use it, and etc. That's always very useful. Now, that's not the only thing, of course, but certainly a very good way of learning, and that I think is a very crucial part of learning. But it's not the only one. Obviously, forward testing plus real testing plus real trading is unavoidable, because we don't get the psychological experience by going only back in the past. However serious we might take it. The more serious we take it, the more we will learn from it, but it can never and will never be a full replacement, of course, but still very useful. So we could dive into a 30-minute chart, I guess. I think could be a good one. And let's just go back to, I don't know, somewhere in the past and start off there. How about May? Let's go back to May. Let's see if we can get there. Good. All right. Now, we don't know much about this euro dollar, but we see that it broke above L3, hit L4, and is hooking back, moving average aligned to the upside. So from that point of view, I think it's an interesting, from a paper trade point of view, I would say this is an interesting long, because we are in an uptrend, broke above L3, we're hooking back to it, so it looks like a break pullback continuation. Stop loss below the bottom with target L5 will be the classical scenario here. So I have no idea. I didn't look. I randomly took May. I wish I asked you for which month, but you can still do that. Maybe we can go back to that month. But that's what I would say. Let's see if it does move forward. 1 second. Oh, I forgot how to move one candle at a time. Does anyone remember how to do that? There's a certain key that allows that. I forgot which one now. Okay, well, if you know, let me know. Well, that's the end of the day, so I would say that that's probably not worth hanging in there. But you can see that, well, it's not much of a profit. About 33 pips. But the risk was, of course, a lot more. Oh, wow, that was, I didn't know it was that big actually. It was 110, okay, 115. But so not much profit there. Didn't get up to the H5, but it did bounce back up. All right, new day. Does anyone remember how to do that one forward? I don't like it that I see so many candles in once. All right, well, that's something I need to figure out because otherwise this really doesn't make sense. I see too many candles in one shot. But anyhow, point is that there is a key that can move one candle forward. F12? Ah, yeah, great, thank you. Perfect. So here we're in uptrend still. I would say breakout above L3 would be good. Let's see if we get the breakout. Not yet. We don't have a candle close above the L3, so we didn't get it. We could be at a bouncing spot right here. Let's see if we can push above moving average. No, we didn't get it. It looks more like a ranging day at that time. All right, got a new European session. Price starts below the L4. Moving averages are not bearishly aligned. Looks more like a choppiness here, so I don't see much. Well, this could be a short. We're now in a downtrend, and we're hooking back to resistance. So let's see how it works out. I would put the stop loss above the pivot point, I would say at least. Let's see. Well, that was a loss, unfortunately. That did not work out well. So that's one win, one loss. All right, well, here we are in uptrend. We bounced back off L3 like the last time, so that could be a long. Stop loss below, I would say any bottom that is near the pivot point. So probably here, preferably, but even this bottom could be an option. I guess the multiple time frame analysis would be better to decide about that. Let's go with the lower one then. And the target gets nicely hit. That's the H5 for about, I think, a 1-to-1 trade if the lower one is used. Yeah, 1-to-1 trade and about 110 pips. So that's 2-to-1 at the moment. The first one was a bit of a smaller window. Etc. Well, you get the point. But that's how you can use that historical Camarilla level. This is H4. I would say moving averages are aligned. Are still bullishly aligned, and we're at a bouncing spot because we're at the long-term moving average. I would consider that more of a potential for a long. Actually, no divergence between the tops. Let's wait for one bullish candle. That's it. I think that could be. I would say that's just based on this a long potential. So a long setup. Sorry, stop loss below the candle wick. I would say. Let's see how that goes. Well, actually, it was the end of the trading day already, so it just went sideways. So that was break even, but it was already a setup a bit at the end of the trading day, which I didn't realize. All right, so break even, well, etc., etc. You get the point. You can keep hitting F12 and moving forward like that. You could even go to a 15-minute chart to have a bit more candles, perhaps, but etc. So 2 candles I'm keeping an eye on. Pound yen for small upside. Euro New Zealand for downside. Pound USD, let's see, for downside if it gets a bit higher. Pound odd as well potentially here. Let me look into this pound odd. 1 second. I will reopen my platform. All right. Let me put on the sequence level. Yeah, I think it's getting definitely in a shorting now with this breakout. It's fully in a shorting bearish area. So I think if hooked back to about halfway, it will break this. It's breaking this bottom. If it makes a shallow pullback to about 2112.50, I think that's a good short with a stop loss above this top of 212.90. Let's see, I'm just counting the levels here. 1, 2, 3, we're below the 4th. So if it hooks back to the 3rd, there should be a good space down to the 5th and 6th, 2112 and 211.50. So yeah, I do like the potential from the 3rd level, 2112.50-ish, 60-ish, down to those levels. Yeah, so that's about a 60/100 pips potential, I think. But it, yeah, that looks interesting, I think. Just needs to hook back again, and then the next downside, I think, is the trade I'm looking for. So I think that has a good potential to pound out. It was already in a good position. Now it's breaking out of that rising wedge. So I like this pound out maybe the most for today at this moment. At least this is the one that seems to be materializing probably pretty soon. Now I think there's something, the price is standing still, so I have to, something went wrong with the reopening, so not sure what. I'll try to figure it out. In any case, it's probably about everything that I wanted to go through with you anyhow. So I'll be definitely keeping an eye on this pound out for a hook back about to that 12 to 1250 to 1260 to 1250, 55-ish. Well, folks, thank you so much for joining. Wish you all very good trading, and hope to see you in the webinars this week. Talk to you soon. Cheers.